Sunday the 19th of March and we are on the Australian dollar, US dollar. So let's have a recap of this market from last week and then we will have a look at it for the trading week ahead. Okay, so last week, coming into last week, we were looking at key resistance levels up above on this market for potential sell positions. I'm just going to mark them in very quickly. Monday, we popped up. And then you can see we had that nice rejection. On the Tuesday, we've seen more of that rejection. Now, what was I looking at after Tuesday? So basically all I went over with subscribers was, after this day right here, we had broken back up above that MA200. So we were looking at still the resistance for the sell positions, but we had to be a little bit careful of the MA200. What we were looking for was potential support. After we've seen the support, the suggestion was there that the market would potentially break higher. Now, if it did begin to break higher, we were able to look at the key resistance levels up above. However, you can see this very, very strong move up. This was after the rate decision, so the American rate decision. They had a rate hike, and you can see the market rallied very, very strongly. Now, we weren't trading during this period, during rate decisions, and also non-farm payroll. I always advise traders just to step aside, let the market do what it's going to do, and then come back afterwards. So we had the very, very strong rally. This is exactly why. You don't want to be short during a huge spike up like this. You can suffer from something called slippage, and it can do quite some damage to your account. It actually happened to me back when I was learning how to trade on the Australian dollar, US dollar. I can't remember if it was non-farm payroll or a rate decision, but I got caught out by it. I'd never even heard of slippage before, and I ended up losing around about 10% of my account in one trade. So ever since then, I'm a lot more cautious around news events. Okay, so the trading week ahead, what are we looking at? Well, we've had a very, very strong rally up in this market. However, we are very close to all of these levels up here, which is key resistance. You can actually see the market has already came up, just tagged it on that Thursday, the 23rd of February, and then sold off. So the market is bullish at present. More than happy to look up here for those sell positions because it is such key resistance. So although we are bullish, we have some very, very nice levels up above. You can see previous highs also up here. Both of these levels represent good resistance and potential selling opportunities. So I'll be watching at both of these levels. Now, if we do start to break up into these levels, what we have to be careful of is potential support, because what we've done is we have pushed up, broke down, and then we have pushed up once again. So if we start to see this market pressing up higher, breaking up above resistance, we want to be careful of potential support. And this also becomes a good area to look for those buy positions also. So sell positions up here. However, we are being careful of potential support. We have key resistance up above. And then once again, if we do see those moves pulling back, we have potential support once again. And for me, these are really the key levels that I am going to be watching next week. I'm happy to look both for resistance and support at these levels, and I'm just going to let price action dictate what it is that I am doing. So if I see weakness, I'll be selling. If we start to break above and then pull back, I'll be looking for that support and the potential buy positions. Okay guys, that's everything for this week. It is really up above that we are watching. I hope you all have a good trading week. I hope that was helpful. I'm James Orr, and thank you.